How to invest in stocks? Which stocks to invest in? Is pharma a good industry? Which stocks to invest in the pharma space? How long should you keep each stock? At what price should you buy a stock? At what price should you sell a stock? Hello, I'm Sim, a finance geek and a self-proclaimed foodie, and today I'm here to answer all these questions for you. Today's stock we're analyzing is Medtronic, and as a fitness influencer on Instagram, I've already partnered with them once and truly relate with all their products and everything that they are doing. Medtronic is a leading global healthcare tech company, and it's a global producer of medical devices like pacemakers, insulin pumps, and various other diabetes therapies as well. It's best known for its revolutionary cardiac devices such as battery-powered and miniature pacemakers. And it's introduced several cutting-edge products into this industry as well. In 2022, it won a contract with the Department of Veteran Affairs to provide its new artificial intelligence-assisted endoscopy module. Medtronic is one of the largest medical devices companies in the world, having served 74 million customers across 150 plus countries. They have four main business segments: cardiovascular, diabetes, medical surgical, and neuroscience. In late 2022, the company announced that it would separate its patient monitoring and respiratory intervention business. The company is also focusing on artificial intelligence to improve its products. It's improved the accuracy of its insertable cardiac monitors, the LINQ2, thanks to the AI algorithm. The insertable cardiac monitors, or the ICM, return fewer false alerts. Progress like this benefits everyone: patients, physicians, and Medtronic itself, since it increases people's confidence in the brand and the products. Another exciting growth area for Medtronic is robotic assisted surgery, or RAS. Medtronic has developed an RAS called Hugo, which is currently used in some countries outside the United States. RAS machines allow physicians to perform minimally invasive surgeries that require no cutting of the skin. Surgeons use tiny instruments that they can manipulate with uncanny precision. These procedures typically come with benefits like less scarring, less bleeding, quicker recovery times, and shorter hospital stays. Medtronic is also known for being a great dividend stock. It's been giving dividends since the past 46 years consecutively and almost has the dividend king status. For those looking for a steady, reliable, blue chip dividend paying stock that keeps raising its payout for a while and is unlikely to become irrelevant anytime soon, Medtronic is the perfect company for you to invest in. Let's look at some of their financial numbers before we decide if it's a great investment for you or not. The company recently reported its second quarter results for 2024, and the earnings per share were $1.25, a 3.8% year-on-year decline. Taking out the effect of currency rates, EPS grew by 2.3% over the prior year. The company's gross profit margins have declined a few percentage points in the recent quarters due to inflation, something the management already spoke about in their recent earnings call. The downside of doing business in emerging markets is that they generally can't afford to spend nearly as much as developed countries, so Medtronic doesn't have room to raise prices or offset its rising costs that it usually may be able to do with its US customers. Medtronic can't do much control how currency exchange impacts its business. It can work through inflation by cutting expenses and working on price increases. So these headwinds seem temporary more than anything, especially with Medtronic delivering mid-single-digit revenue growth. But the headwinds have definitely weakened Medtronic's financials, which investors should keep a watch out on before moving forward. Most notable in the drop is the free cash flow. This drop has, however, increased the dividend payout ratio to roughly 90%, leaving little room for management to do things like pay down debt on a balance sheet holding nearly 3 times as much debt as Medtronic's EBITDA. If Medtronic can accelerate its earnings growth to somewhere near 10%, the price of the stock today would definitely be a bargain to get in at. Revenue on a quarter-on-quarter basis grew by 1.4% on a reported basis and 1.7% on an organic basis. The revenue from US markets grew by only 0.7% from Q3 2023 to Q3 2024. But revenue from emerging markets grew by 12.8% on a reported basis and 13.2% on an organic basis, which is quite significant, yeah. Net income increased by 8.8% quarter on quarter and 17% on a year-to-date basis. Revenue from diabetes increased solely by 12.3% on a year-on-year reported basis, cardiovascular by 6.1%, medical surgical by 3.9%, and neuroscience by another 4.5% year-on-year on a reported basis. Revenue from US grew only by 1.4% year-on-year on a reported basis. Revenue from non-US developed markets by 7.8% and emerging markets by a good 9%. It's quite clear now that emerging markets seem to be where they can see a lot of growth if they do manage to get their cost cutting in place. Revenue from cardiovascular experienced a 5% growth driven by strong performance in pacing, structural heart, aortic, cardiac surgery and coronary. Neuroscience experienced a 4% growth benefiting from strength in spine and biologics. Surgical and endoscopy devices as a part of the medical surgical division saw a good 4.5% year-on-year revenue growth on a reported basis. The diabetes segment saw a whooping 12.3% year-on-year revenue growth on a reported basis. In the US, they nearly doubled the new user growth year-on-year, with strong growth in both MDI users and competitive switchers. The entire portfolio is so well positioned to deliver growth. They've received so many approvals recently that once their products are launched into the market, they'll definitely be market leaders and experience tremendous growth. For one heart condition, cardiac ablation, where they usually perform open heart surgery, Medtronic is poised to expand share in an unpenetrated, attractive electrophysiology space, which is, by the way, an over $8 billion market. Similarly, for diabetes, they're returning to growth as smart dosing overtakes the current therapies. Growth driven by conversion of standalone CGM and MDI to superior outcomes of smart dosing. Several recent approvals are just starting or are yet to start contributing to their growth, including the Aura EV ICD, the Pulse Select Pulsified Field Ablation System, Nitron Cryo Console System, Percept RC featuring BrainSense technology, MiniMed 780G system with Simplera Sync CGM, and Simplicity Spiral RDN system, advancing innovative care technologies in robotics, AI, and closed-loop systems. 5 AI products have already received AI approval. In their recent earnings call, they also discussed the guidance for FY 2024, which they have revised upwards. They reported revenue somewhere between $32.1 billion to $32.2 billion and an EPS of $5.19 to $5.21. The company currently has an 87% payout ratio and obviously has been paying dividends since 46 years now. Every quarter the dividends have been around $0.6 to $0.7 per share with a dividend yield of 3.17%. The PE ratio currently is at 27.63%, which is very similar to that of the S&P 500, which is 28.52. So I don't think the company will be outperforming the S&P 500 at all, but a lot of the competitors in the space are a much higher PE, like Abbott is at 34.9, Intuitive Surgical at 92.4, and BD at 43.5. So obviously there's a lot of scope for growth for Medtronic as well. If you're looking for a stable growth company that pays out dividends quarter on quarter, Medtronic is the stock you need to invest in and purchase the stock at a price of somewhere between $83 to $87. I definitely foresee the price of the stock reaching somewhere between $97 to $105. So make sure you invest in it ASAP. If you found this video helpful, don't forget to tap the subscribe button. Bye.